Hey, good morning, everyone. Hope everybody had a great long weekend and welcome back. I'm going to get into what I'm kind of seeing going on as far as a little bit of a reemergence of the deflationary or however you want to phrase it, disinflationary move that was associated prior to the Powell pivot. And now I'm kind of noticing maybe the oil was kind of the first to top here in the whole kind of energy space and whether or not we're going to get a little bit of a deflationary move along with continued growth slowing, and that's kind of what's sticking out to me, global macro. So I want to hit on that, and then of course we have the turning point in the global business cycle. So for those of you that may or may not be familiar, but you can learn more about uh, this model and this cycle from Marty Armstrong's work over at armstrongeconomics.com. Just go to his blog and then click back through a page. You'll see this article here about Happy ECM Day. It's pretty good. So I know some of you are kind of new to that, but I've built a lot of his cycle work into our model on a smaller duration, and then I talk about that in our course. And um, I'm actually going to put out some tweets on this, but I did an institutional report back in 2015 on this and how it lined up with different markets in the past. I went through some charts here on Bloomberg. I just kind of wanted to share if you guys if you enjoy the historical uh, studies of this stuff, but also just to show how important this turn was that we had over the weekend. And we got to see what markets line up. Is the dollar going to resume its uptrend in a meaningful way? And the euro down? Are we going to see oil come back off? Are we going to see a peak in the Dow, which seems to be lining up? Are we going to see a peak in the Nikkei? We want to see what capital shifts come about is the key here. So here, just some examples. I mean, this is the wave structure as defined by him, and it's again he didn't come up with this; he just discovered it. So it's just kind of the heartbeat that goes through the global economy. It's a derivative of pi. And so the last couple of major wave peaks, you had the high in the Dow. I went back and it actually came out to the exact day, July 20th, 1998. On the other side of that wave from 98 to 2002, basically right off the roll at the top, you had long-term capital management. Russia collapsed. You had a 19-year bear market in gold start in 1999, but with the turning point here. And so these are turning points. They're not necessarily highs and lows. They're marking turning points in time. A lot of times you'll have an equities line up and peak with the wave, but sometimes you'll have, like right now we're coming into the bottom of the 2020 wave. So you could easily see maybe the Dow peak with the bottom of the cycle. I talk a lot about that when we were going through some of the cycles on Bitcoin. But point being is sometimes you'll have cycle inversion where you'll have a high in a market at the low of the cycle, the turning point. But like for example, here in 2002, stocks bottomed on the October low just slightly before the November turn. You had the peak in U.S. real estate. That's where all the capital was concentrated within. A lot of times it'll concentrate within a country, a sector, an asset class. That was the main peak with this wave, 2007 to the exact month. Then you had obviously on this side of the wave, a lot of bad things happened. The great financial crisis. Um, it goes on and on. I mean, the internet.com bubble peaked here. You had There's a pi date here, 2001, that happened to the exact day of 9/11. You have U.S. real estate bottomed right here with this turn. So it was a cyclical move, correction off the highs, and then bottomed. And then you also had the sovereign debt crisis with the IMF to the exact month there. I go over a lot of these examples in our training course on our model, our 9-hour directional course on our institutional stuff. But here's the wave that we were coming into. Sorry that this doesn't scroll very easily. Uh, so I probably need to update this with some of the most recent turns, but This is what we're coming into here in January, this last weekend, 2020. So you're going to see political turning points and trends. Like, it's interesting that we're starting the impeachment process today. It's interesting that you had the separatist kind of feel in Virginia going on with the Second Amendment stuff. There's Russia political stuff going on. We got Davos. There's a lot of political trends. That's been a big part of the wave off the 2015 high, when it's actually when Russia went into the exact day into Syria. There was a whole bunch of migration trends and war cycle trends that came out of that. So it's been very much a populist movement trend into 2020. I think it's interesting that the impeachment happens to be coming out the backside of this also. So we'll see where that takes us into the next turning point, which was 2022. So if you see a peak in the major U.S. equity indices on this turning point, very, very reasonable to see a 2-year bear market into that turning point before you get a low. Depends on what other markets line up. Maybe it's a dollar rally into 2022. Um, um, so we'll just kind of have to see. It's obviously not one day is not going to really mark the trend, but a lot of times these markets will pivot to the exact day. I mean, here we had the dollar breakout. Euro broke down on the last turning point, 2014. I went back and looked at Bunds, had closing highs at the exact week and month. Commodities peaked in 2011, right around the turning point. Here's the example of the real estate topping to the exact month, 2007 US Dow Jones Real Estate Index. And then here I overlapped the ECM wave, and you can see we bottomed exactly on the month of the turning point. Pretty amazing. And then, I mean, I went back. This is 1994. Dow bottomed to the precise day, April 4th, with the ECM turn, the exact day. And then look at the rally from there, just absolutely gone. You guys, I'm happy to send this report out to anybody that you guys should just go to jenkinscm.com, get into our chat room here. It's free to get into our chat. I have some paid rooms for members, but if you come into the chat room, I'll have to add you to my email list and actually invite you, because of the Symphony is pretty secure financial collaboration platform. So I have to kind of reach out to you. So I get you in the room that way. But that's free to come in here. I'll share the report with you. What else, man? I did the 1997 turning point. The Dow doubles in the 97 turning point. Tops to the exact day on the 20 July 98. Corrects 20%. Panic move. That's a pretty good turning point too. Here's what the Russian ruble looked like 1998. That's when LTCM needs $3.6 billion bailout. seemed like big numbers at the time. Here's this 19-year bear market that started with a peak in 1980. And then you had the 19-year low, which happened to bottom to the exact month of the ECM. So there's a hidden design of the universe. There's a hidden nature to not just, I mean, we understand the cyclical and mathematical significance of geometry and things in space, but there's also a geometry of time. So that's what we do a lot of our work on in this cycle stuff. NASDAQ peaked in 2007. This happened to do a cycle inversion. Oh no, it just started, it peaked a little bit before that turning point, but you had the exact bottom in November 2002. I haven't looked at this in a while. Commodities peaked with the ECM. Gold, the CRB index 2011. I kind of mentioned that one already. That was a cycle inversion. What is this? Bunds? Yeah. 10-year yield. I think that low was the low in 2015 with that cycle turn. And then we bounced, and then I obviously went negative. Euro, this was the breakdown 2014. Well, you guys can look at this. You guys get the point. Today's price action. Let me switch over. I wanna highlight where we're at on energy and oil. Let's see. So I think this is really interesting. We're coming from. I just saw this trend line this morning. I'm not a huge into trend lines, but they do matter. I mean, this has been the long-term trend, deflationary trend, and we had a pretty big break this last week on natty gas also, which obviously matters. This is all deflationary. And then copper was down earlier. I think you're going to see another series of lower highs. There's probably a trend line right off the top of that. Oh, come on, platform. This is been going slow. Their platform this morning. Everybody must be logging back in. You basically have a long-term series of lower highs there also. So I'm gonna want to watch to see if this daily cycle starts to make lower lows. That will roll the copper trend back down. That's telling you more of the same. Where's the growth out of Asia? Copper doesn't see it. Where's the inflationary, reflationary bounce from here? Copper won't see it if that starts to roll over. And then along these same lines here with crude, notice the band structure is all negative. We failed at them again. You're in this what we call the southern hemisphere as far as below the 200. You may see this monthly cycle to continue a little bit higher. Weekly rolled over right into the Iran news again with the trend line. Nothing but topping tails. This is a very bearish engulfing pattern also. So oil was, I was making the point this morning, oil was kind of one of the first to pivot from the Powell pivot and make a low. And now I'm kind of wondering if oil is going to be one of the first to roll over, if we're going to get more of the same deflationary risk off type of growth slowing move that we had late September, October, November, December. And the continuation of really what I think is the major trend there, despite the Fed's best efforts. So weekly cycles down, daily. Daily this is the interesting pivot here, 50, 56, call it 56, 56 and a half is our pie line. It's kind of the two standard deviation bottom of the channel. You can draw it different ways, but if it starts to break down on a daily, weekly, then I think you're going to see a move back to 50. I did buy some puts this morning and put ratio spreads, and going to find some more ways to actually flip and get more short there if that starts to break down. I am still a little bit core long. We've been in and out core long on most of this move. And I think this last pullback, I think, is going to be a little bit of a bull trap, and that's fine. We might give some back. I mean, when we were adding back to our futures, we were talked about the need for probably buying puts just to protect from that type of phase transition. Yeah, that's mostly what I wanted to say. I think there's some signs here that maybe we're starting to see some topping action. And again, I think the big one will be whether or not the Dow wants to make a high or not this week with the ECM turn. So yeah, guys, jenkinscm.com. I have a free ebook that I talk about a lot of this cycle stuff as well. And then again, just pop into the chat room. I don't have our weekly analysis up. I'm gonna make some pages for that to make it a little bit easier when I'm sharing like videos like this. So pop in the chat room, and then yeah, I'll get you guys in there and start the conversation. Pretty passionate. That's a big cornerstone of what we do, obviously, is with cyclical analysis. So lots there to talk about. Yeah, best of luck out there. We're going to get things going in our prop room this morning. We'll be day trading. We're going to look for some shorts on the Russell and do a little bit of pairs trading. All right, have a great day out there.